Hey everyone, and welcome to your A-Star Revision Masterclass on the Depreciation Straight Line Method. I am absolutely thrilled to guide you through this explainer today. We're going to treat this exactly like our own virtual whiteboard session, bridging that critical gap between basic data entry and high-level financial intelligence. Whether you're just aiming for a solid pass or you are out to completely ace the IGCSE Accounting 0452 exam, this session is going to totally transform the way you approach your paper. So grab your pens, get your notebooks ready, and let's jump right in.
Here's our roadmap for this explainer. We're covering 1. Core concepts and vocabulary, 2. Technical execution and T accounts, 3. Ratio analysis and evaluation, and finally, 4. Examiner tips and pitfalls.
All right, Section 1, Core Concepts and Vocabulary. Now listen closely because Cambridge has actually updated their standards for the 2026 syllabus, and you absolutely must adapt to this. The examiners are specifically hunting for modern international terminology. You've got to use terms like irrecoverable debts and owner's equity with literally 100% accuracy. Slipping back into old terminology, that's just going to cost you easy marks, whether you're valuing owner's equity or calculating the net book value of your depreciating assets. So lock these exact definitions into your brain right now.
This right here is your golden rule. This simple accounting equation must be perfectly maintained at all times during the fiscal period. Every single time you make an entry, you are reflecting the duality of every transaction. Think about it in terms of your fixed assets. If you decrease an asset's value through depreciation, well, you must have a corresponding expense that ultimately brings down equity. The entire business entity concept relies on this perfectly balanced scale.
So the absolute crucial point to remember here is the prudence concept. Look at the rule regarding ignoring losses. You should never, ever overstate your profits by ignoring the wear and tear and your non-current assets. In fact, failing to charge depreciation is a direct violation of the prudence principle. And when you hit paper 2, you're going to face these multi-layered business scenarios where you really need to flex that master vocabulary, words like accrued, prepaid, realization, and consistency. Remember, banks, owners, and tax authorities rely entirely on your integrity to make their massive annual decisions. Your reporting has to be perfectly transparent. Moving right along to Section 2, Technical Execution and T accounts. Okay, if an exam question uses the command word state to ask for the procedural flow, which is how you minimize calculation errors, by the way, this is your exact path. You always track a transaction starting from the identification of the correct source document. That could be an invoice for a brand new machine, a credit note, or a bank statement. From there, it flows naturally to the books of prime entry, then straight into your T accounts, forming the trial balance, and finally resulting in a seamless transition right to the final financial statements of the business entity. When the examiner asks you to prepare a provision for depreciation account, the T account structure is absolutely your best friend. It's the gold standard. Let's talk method for a second. Even if, worst case scenario, your final math is slightly off, bringing your balance BD down correctly on the credit side and calculating the current year's depreciation expense on the debit side, that shows the examiner your logical flow, and that earns you highly valuable method marks. You must distinguish correctly between balance BD and balance CD. It's crucial. Also, be incredibly careful with mathematical traps, like confusing trade discounts versus cash discounts when you're first valuing an asset. Oh, and if you're working on manufacturing accounts, getting your state symbols correct is a total game changer. Let's dive into Section 3, Ratio Analysis and Evaluation. All right, let's actually put this into practice, because just crunching the numbers isn't enough anymore. Here is your interactive challenge for that A-star response. I want you to pause the explainer right now, grab a pen, and suggest and explain the specific business causes for a current ratio dropping this dramatically, from 2.5 to 1 all the way down to 1.1 to 1. What does this actually mean for the business's liquidity? Seriously, go ahead and pause right now. Give it a shot. Okay, welcome back. So, how did you do? Did you nail it? A top-tier accounting student knows they have to look behind the numbers. A massive drop like that in the current ratio, well, it could mean inventory has been severely overpurchased, which is tying up all your working capital. It might mean trade payables are being settled way too slowly. Or, and this is a very common one, it means cash reserves have been totally depleted to purchase massive non-current assets. And remember, those are assets you're now going to have to apply straight-line depreciation to over their useful lives. Spitting out calculation results is just baseline. Identifying the why is what's going to get you that top grade. Now, when you're evaluating different businesses in an inter-firm comparison, you have to put your critical thinking cap on. Keep in mind that differing accounting policies make direct comparisons incredibly difficult.
If firm A is using the straight line method and firm B is using the reducing balance method, comparing their raw asset values and profits at face value is literally comparing apples to oranges. Straight line charges an equal amount every single year, keeping profits nice and stable. But reducing balance, that charges more in the early years, tanking short-term profit but saving on immediate tax liabilities. You absolutely have to adjust your analysis based on these specific policies. If the exam asks you to evaluate the true quality of a profit, you've got to look completely beyond the surface numbers. When assessing something like return on capital employed, ROCE, the spreadsheet doesn't tell the whole story. Real-world factors like staff morale, the business's physical location, and its overall market reputation, those heavily impact long-term sustainability. These non-financial factors obviously aren't captured in your depreciation ledgers, but they're absolutely essential to whether a business survives and grows. Finally, Section 4, Examiner Tips and Pitfalls. I am pulling this next part directly from the 2024 and 2025 Principal Examiner reports, so please heed this warning. Sloppy handwriting in ledger accounts and mixing up revenue with capital items will actively destroy your final grade. Seriously, if the examiner can't read your numbers, they cannot award you those crucial method marks we talked about earlier. And failure to distinguish between the revenue and capital expenditures, like, say, expensing a routine machine repair versus capitalizing the actual purchase of the machine itself, that will completely ruin your entire depreciation schedule. Write clearly and know your definitions inside and out. On exam day, your strategy has got to be razor sharp. Focus strictly on your time management. Let the exact weightage of each question part dictate how much time you spend on it. Please don't spend 20 minutes on a question that just asks you to calculate a basic straight line percentage. And I'll say it again, show all of your mathematical workings visibly on the page. Leave a clear, undeniable trail of breadcrumbs so the examiner can follow your logic. As we wrap up this explainer, I want you to step back from the textbook for just a second and ask yourself this final big picture question. Are you just practicing math to pass a test, or are you truly mastering the transparent financial reporting that literally drives the global economy? Because ultimately, out in the real world, banks, owners, and tax authorities are going to rely on the exact skills you are building right now. Keep practicing that straight line depreciation, keep showing your workings, and I absolutely know you're going to crush this exam.